Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This Moving Iron Podcast is brought to you by John Deere. I've got Machinery Pete back here to talk about what's going on in the marketplace. Greg, how you doing today?
I'm doing well this morning. Casey, how are you?
Doing well. Got you fresh off the road, man. Where were we at last night?
It was a great event in Valparaiso, Indiana. Shout out to the good folks at Keystone Cooperative. Amazing organization out there with a footprint. Let's see, the western, or no, can't remember which side. I think eastern Michigan, maybe, and then Indiana and Ohio into a little bit of Illinois. But it was the first time they've done it. They had a kind of a co-op classic event. They had two of them. Valparaiso was the second. But man, what a crowd. I think they had like 1,200 farmers there, and they had 70 exhibitors. And like Indiana director of agriculture was there speaking, and I did my little talk and just met so many great people. And the Keystone's really got it going on. They have I was talking to their people there. They have a program they call Seed, and it's really cool. They take FFA kids that know they aren't going to college, but they bring them in, and it's like a year-long program, and they expose them across their 5 business segments. So I think agronomy, swine, energy, one is corporate, and I can't remember what the fifth one was, but I got a chance to visit with a young man in that program, and really investing in young people. So shout out to Keystone Cooperative, good people there.
Yeah, it's going to be a bigger deal, man. You've seen a lot more of these apprenticeship-style programs pop back up. You know, when I got out of high school, there were a lot of apprenticeship programs out there that you could have gone through on electrician, plumber, HVAC, whatever it might be. And it felt like some of that stuff had kind of fallen off, but they are coming back heavy and hard now, and it's a great opportunity for 2 years out of high school. Some of these kids are making $100,000 a year. So it's pretty impressive.
I told the young man in the program, I think his name was Michael, a sharp young man. He was president of the FFA chapter, and great visiting with him. And I told him my experience looking back, because when I went to college, I had no idea what I wanted to do. And I think it's important to figure out what you don't want to do in life, just as important as what you do want to do. But These kids, in college can be great, but you don't want to wander into it with, like I unfortunately did. But I really admire organizations like Keystone, and a lot of the dealerships do a tremendous job. We've seen now, like the signing days. Like you played football, you signed up to play college ball. Now the kids getting the signing day to go work for the dealership. It's really cool.
A cool experience, man. I mean, it really is. It's the way they hype that up, and for the longest time it was just hey, we're going to come by the dealership and sign this piece of paper with your parents, and now they've made it an event, and that's really, I mean, it's awesome, because it is a big step. It's a big milestone.
It is. It's important to honor that. I love how dealerships do it. Keystone does that too. They have the signing days, and it actually reminds me. I'm getting pretty old now, but I think like 100 years ago, America actually has roots in this type of thing, because I was in my second year doing a YouTube video, Casey, and I had a friend, an engineer down with John Deere, message me, and he's like, Pete, there's a guy you got to interview. And it was 3 months before he passed away. And it was, see, now I'm showing a sign of my age. I can't remember his name. He was the chief engineer on the John Deere 4020, Harold Brock. Okay, Harold Brock. And so I go interview Harold. He's 96 years old. And he told me when he was 13 years old, living in Detroit, Ford Motor Company plucked him out of middle school, basically, because he was good at math and science. And they said, we'll keep teaching you that part, but let's get you in industry here. So it was an engineering training program. And to hear Harold talk about that it was normal back then. And it's good business. It's good for kids. So kind of fun to see that kind of looping around again.
Yeah. Well, they're training them, that was always the funny thing we always talked about when we were talking about sales guys, those kind of things, is that do you go find another sales guy that's got a bunch of experience and all the bad habits he's created throughout his career, or do you go find the young kid that's never sold anything to anybody that you can mold and make into your own? And it was always
Right.
this 6 1, half dozen another
Right.
conversation that you're going through. So
I think that's a whole series of podcast topics there, Casey. Your
yeah,
experience with,
exactly.
uh, people on the sales side and just interacting with people. I'm
Yeah,
sort of fascinated by that too. I mean, you can have quiet people that can be great at sales, or you can have people that are really, kind of the other way can be just as or more successful. But it, to me, when I watch it over from a distance, it's sort of like authenticity comes through when you're being yourself. And then hopefully you're a good listener. You're talking to your customers, not just jamming your offer down the throat or whatever. But I think the
exactly.
listening
Yeah,
part, to me anyway,
yeah,
resonates. I don't know about the audience, but
yeah,
uh, I think that's important.
yeah, for sure, for sure. All right, man. Let's jump in and talk a little equipment right now. So, we've been tracking this all year since we've been started this podcast. Of course, we've been doing it for a long time. Outside this, um, you had some more data come through that shows that the amount of equipment going to auctions is subsiding year over year.
Yeah, I just, in advance of going to talk at Keystone Cooperative yesterday, I wanted to, you know, move me on the anecdotal and, me, I like to hard numbers. So we've talked a lot about, the first part of the year, Casey, here, how compared to 24, the volume of late model equipment, particularly from dealers, hitting the auction market is way down. Now, there's two ways of looking at that. Last year basically was an avalanche. I mean, it was 126% more high horse tractors sold at auction versus 2014, basically year one or year two of the last big downturn. So dealers really aggressive last year and then kind of hit the pause button, but, end of November, December of 24 into early 25. So, I mean, if I look at 175 plus horse tractors, 0 to 3 year old units sold at auction the first 6 months of this year is down 49.1%. 100 to 174 horse down 54.7%. Combines a little less, but down 25%. Planters down 42.9%. And again, that's just the 0 to 3 year old units. Now, that was through June, like we've talked the last few weeks. July historically sees more dealers bringing stuff to auction. We did see that again end of July into August. But again, I think that lower volume of late model stuff is why we see things like, if I talk like an 8R 340, average auction price is this year is 291.8. Last year it was 3067. So it's dropped less than people would assume given the pressure out there right now. But again, it dropped a ton last year. So we just kind of hitting a little bit of a pause here through the first half of 25.
Yeah. So one of the things that I've been tracking is if you watch and pay attention to what's going on the retail side of the business, those numbers are starting to come down. They're not free falling by any means. They're starting to see just a few pieces here and there come off. The biggest factor that you see driving that is the amount of new equipment that's being sold is so small right now that the amount of those 1 and 2 and 3 year old pieces of equipment come back into the marketplace isn't necessarily keeping up with the amount of equipment that's going out. Right now, the equipment that's going out, I'd love to sit here and tell you is being sold at retail and everyone's making tons of money and oh my gosh, it's gumdrops and candy canes, but that's not the case, right? You and I both know where the bulk of that machinery is going down. Even though you're talking about the amount of equipment that is going to auction is down year over year through July or through June. I'm sorry. You still see a lot of machinery getting sold at auction. Now, that is creating this environment where the stagnation of the marketplace is looks a little bit better than what it actually is, and I think that's something to pay close attention to. That there's not there's still good things happening, but at the end of the day, there's still a lot of equipment out there that's really high priced, and even though those prices have come down probably close to 25 or 30%. I was talking, Aaron Fennell and I were talking about this the other day off camera here, and you used to be able to throw a rock out there and hit a combine that was $700,000. And today you kind of have to look for that. There are not nearly as many $700,000 combines that are out there. So that tells you that the marketplace is coming back together. And as it's coming back together, you're seeing retail sales pick up with in conjunction with stuff being sold at auction. And I think this is kind of a prelude into what we're going to see happen this October, November, December timeframe, like we've been talking about, where you're going to see a lot more auction stuff happen and those kind of things start rolling through. This crop tour that we're seeing right now, the Pro Farmer crop tour that we're watching right now, is going to have a huge effect on what 6 months from now buying patterns look like. Because right now, guys are taking a hard look at their operations are at, profitability, those kind of things, what they have contracted out, what they don't have contracted out, and all that money is going to show up just like it does every year at the end of the year or the first quarter of next year. And then that's when they're going to start making buying decisions about equipment. And there's that year-long lag that you see happen in ag equipment sales, where it heavily depends on the lack of or profitability of that year's crop and what happens in the next 12 months as far as buying goes.
Right. Yeah, it's interesting, like you were saying, the amount of new sales has been so pinched off here, particularly on the grain side, high horse stuff. Personally, I've wondered this in past cycles, but more so this time because, if we look back a decade ago, I think at the OEM level, they hadn't quite tightened up the production to the extent they have now. I mean, Deere just laid off more people last week, and not unexpected. But so if you have one, now two, drifting into 3 years of lower sales of new, that's just less 1, 2, 3-year-old used units, available, whether they're on the lot or at auction or for sale privately. So whenever things do turn, again, that's when you start to realize, like, oh, well, okay, I need to update my combine or planter, but maybe I won't buy a new one, but I'd like a nice 2-year-old one, but wow, there just aren't as many around as I thought there would be. So that's one thing. But you're right, it's definitely not all sunshine and roses out there. I mean, I covered an auction we filmed for our TV show a week ago in Western Iowa. Great sales. Tractors sold right on par. But literally, we turned the corner after the tractor sold, and then it was on to the combine, which was a very nice machine. It was a 22 model New Holland CR 780, 400 SEP hours on it. Now, that's a smaller machine. In New Holland, we don't see as many, obviously, but I looked at our website before the sale that morning. There was one for sale with like a little bit less hours on it, and that dealer was asking $375, and on the auction it brought $195.7. So and then the math scale is whatever, 54% of asking price. And that actually was interesting because I just run some numbers on Case IH 8250s and John Deere S780s. The machine repeat ratio, we talk about average auction price to average retail price, and they're both right at like 63.5%, which is the norm. The last 25 years I've been tracking is 71 to 76%. So you can tell there's pressure out there. Grain farmers are under pressure. And again, dealers last year, taking all that stuff out to auction. So yeah, it's a lot going on at the same time. And I just get really interested looking ahead, how it's going to play out 6 months, 12 months, a year and a half from now, based on, not many new units being sold. That inventory, like you, I watched the back end, our volume on machineryrepeat.com, and a year ago it was a big bubble difference between the supply and the search traffic, and it's much better now. But our dealer friends, I'm sure, would like to move more units to avoid paying interest on that holding cost. So it's no fun.
Yeah, and that's really the driving factor right now, the holding costs associated with that. And the thing about the holding cost thing is it's on both sides of the street, right? You've got it costs you to hold that machine in your barn as much as it costs the dealer to hold it on their lot, right? And those are all the things that are associated with that are depreciation, interest cost, all those things come into play, and those things start to stack up as we're looking at this stuff move around. There's so many factors out there right now, Greg, when you start looking at the equipment business that point towards, continued tough times, right? I mean, you look at commodity prices where they're at. You look at interest rates. Now, the Fed's talked about lowering interest rates, but they've been talking about lowering interest rates for a year. So, and every
Yeah.
year every time they do it, they just keep it the same. But as you're watching these things move through, we got a long ways to go before there's 4.5% interest, or 3.5 or 4.5% interest sitting out there
Right.
at a lending rate. Not the lending rate, but the actual physical. I'm the consumer getting my interest rate out there. So that's really what's going to drive this pattern. Now, it'll be interesting to see what happens. We saw this happen after 2008, going to 2009, with the double depreciation, Section 179 coming back into play. That was a big deal back then, but also at the same time there was a lot of on-farm income during that time frame too, so they needed to burn some tax money. So
Right.
this will be a little bit different to watch that play out. But I think that could be, in some instances, could be a
Yeah,
motivator for
it's
some folks.
interesting. Curious to get your take on something I was asked recently, Casey. It was kind of from the Wall Street side, but pinging me like, "Hey, Machinery Pete, if the Fed does drop interest rates, will that be a force enough to jar farmers into buying new equipment?" And mostly talking about combines, high horse tractors. So on the grain side, where we have pressure with low commodity prices, and I'm shooting from the hip, and I said, "Well, I don't think so. I don't think a minimal drop in interest rate is going to get a farmer necessarily to go run to the dealership to buy a new 400 horse tractor or combine. What I'm interested in is, well, then the next question was, okay, Machinery Pete, at what point, how long do we have to go here of farmers not buying new equipment before, I mean, if you're farming, particularly if you're a larger farmer, you have to have reliable equipment. And if you're pulling out of the mud deals and the dealer wants you to pull out of those to manage their used inventory, and okay, how long do we have to go until the farmer is like, ooh, I don't want to, but I kind of have to update my or get a new tractor under warranty or combine. And I kind of said, and again, curious to get your take, but we were pretty iron heavy going into this downturn. Farmers have a lot of iron. Um, so I said I think you could drift through 26, kind of in the same belt tightening, and then maybe get into 27. And at that point, now you're, whatever, pushing 4 years. And at that point, does that jar some, activity out of need? What do you think?
Yes, I went out and looked at AgDirect's rates. You can go on the website and you can see what their rates are right now. And over $250,000, depending on your term, it's anywhere between 6.25% and 6.45%. Right. That's down a whole 1.5 points basically from where it was. Probably that
Yeah,
peak back in 2023. 2022, something
yeah.
like that. So it's come down significantly from where it was. It needs to come down another 1.5 points, I think, to really get
Oh,
people fired up and ready to come back in and think about doing some stuff. The average age of the even though there was all that new stuff sold during that time frame and all the stuff that came through, the average age of the U.S. Farm fleet, I think, is the oldest it's been. Only rivaled by that between the stretch between 2014 and 2020, right? I think so. It's like when guys had cash to come in and update stuff, they couldn't get it because of the COVID stuff like that. And then when they could get it, it was so expensive they couldn't afford it. So some of that stuff didn't happen. We've been seeing a lot of churn that way. Um, I see two things happen. I agree with you right now. I think 26 is a settling year. We talked about 25 was the year that we hit the bottom and kind of started smoothing things out. We're starting to watch things kind of bounce across the bottom. Some Steve talked about it before we started recording. Some of the sales you watch are really, really good. Some of the sales you watch are kind of,
hmm
they're kind of there, right? So that's you would expect that volatility in a leveling out cycle. 26 to me is the new normal, right? This is what the new normal looks like, and we're going to slug our way through this, and this is what it's going to look like. It's going to feel just like 17, 18, 19. I think that's what it's going to feel like. And then when you go into
Yeah.
27, to me, you watch 27 happen, and that is when you have this. If there is a surge in crop prices, if you see 450 corn or something like that, where no one's getting rich by any means. No one's buying an island any place, but they're keeping their head above water, right? That could trigger some cells there. The thing about some of this stuff at 27, 28, 29 time frame, you start watching that stuff roll through. I'm watching this used equipment marketplace, and I'm watching people have a discussion with themselves and their dealers and whomever else that all I really want on my sprayer is this new liquid system, right? I don't want to spend $800,000 to get the liquid system that I want, right? I want to spend $150,000 to get the liquid system that I want, and now I have the technology that I'm looking for, right? These upgrade kits, I think, are going to play such a huge part in the used equipment space over the next 3 to 5 years that it's going to change the way we view used equipment and how we look at used equipment. And I think that starts at 27 and at 26. Like, we're starting to see it happen now. I mean, upgrading planters, upgrading sprayers, there's all kinds of upgrade kits and stuff like that out there, different stuff like that. But I really think that flip happens into 26 into 27, right? Or 26 into 27. And I think that changes the way people look at I gave a presentation in front of the Farm Journal folks, 2-3 weeks ago, whenever that was. We were in Kansas City doing something. And I didn't, I look at this stuff every day, and I had to put it on paper for it to really make me understand it. But there are like 5 different ways I could have bought a sprayer based on my scenario I put together, right? Kept the one I got, upgrade the one I have. Don't do anything to the one I have. Upgrade the one I have. Trade mine in on another used machine, right? Upgrade that buy that one, then upgrade that one. Or I can trade mine in on a new one, right? And next thing you know, I'm like holy crap. So now if I'm a producer now, right? I'm out farming every day, and I'm sitting here looking at the options that I have to make things happen. It's not cut and dry anymore, right? It's not this like, okay, I don't want this one anymore. I'm going to trade it on another used one or another new one, right? And that's going to be that's your decision tree. Well, now your decision tree's got a lot of branches, and those branches all have significant effects on how you position yourself technology wise into the future. And some of that is stair stepped into some of those things, and some of that is all at once. So it just depends on what you're looking at, but it's going to change how people think about this stuff. And this interest rate thing, staying at 6.5%, which, by the way, when I started in this business, if you had a 5.5 to 6% interest rate, you're doing pretty good, right?
You were rocking, yeah.
You know what I mean? So when we look at where things are at now, the dollars associated with the 5.5 to 6.5% interest that we see now are 3 times as much as they were back then. So
yeah,
watching this stuff kind of play out, it's going to be interesting, Greg, to watch how it rolls, because it's changing.
It's a great point, Casey. I mean, it's those retrofit, upgrade kits that manufacturers have invested in smartly do change the picture. It's not as cut and dried as it was. I think what we've seen in the used planter markets led the way there over the years. I mean, turning your 2010 model into a new planter.
Yeah.
How do you want it spec'd out? How much do you want to spend on making this thing new? So yeah, it'll be fascinating to see that apply across, other, sprayers, tractors, things like that. So, yeah, I think that will help this process. And then I think there's a couple things in the big beautiful bill that not really talked about too much. One, I believe they kind of beefed up the Section 179 provisions, not just obviously for farming, but all business, new and used equipment asset purchases, so that you can write off. So it doesn't mean much when people don't have money to spend. It just lays there. But the fact that they beefed it up, like we've talked about, then it's just a kind of a question of when that ignites. The other thing I'm kind of fascinated by, and I don't know to extent this is true or not, but the emission stuff, obviously kind of the rollback attitude. What is in that big, beautiful bill? Does it allow for manufacturers to not do the, where we're at now with these engines? Can someone go make an older school machine I haven't heard that addressed yet.
Yeah, I
And
haven't either. I haven't either.
I know, I mean, changing your production line would be huge, but if you're doing what I do every day and you look at the auction price points when times are tough on pre-def equipment now, it's actually
Yeah,
going higher and higher.
yeah,
We
yeah,
talked about that 2388 that Darby Walton sold in Ohio 2 Fridays ago. It had $2,300 on it. An old 6 model 2388 brought 120 with no heads.
yeah, yeah.
And then a 9770 for 187.5 in Iowa with that had 800 engine hours on it. But people are voting with their checkbook. They want simpler, less expensive equipment.
Mhm.
Like you mentioned, someone with a sprayer. I don't need this stuff, but I just want this.
Mhm.
So it's smart for manufacturers to offer more nuanced offerings, new end use. So
Yeah,
just wrap it all up together, and it's interesting.
yeah,
But if a manufacturer could, whoever it was, if it's possible to manufacture, kind of make a pre-def machine. Again, I don't know if that's possible, but brother, whoever did it first,
yeah.
wow.
Yeah, you're seeing. I've heard rumblings about what you're talking about, where some of that EPA guidelines and some of that rollback stuff on the Tier 4 regulations, those kind of things. That maybe there could be something out there where I don't think a manufacturer would ever stop. I mean, they might. They're not really not gonna um, stop manufacturing that stuff because it's from administration to administration, right? So, but they
Right.
could take
Could
it back
flip
to the
right back.
dealership. Yeah, but you go back to the dealership during the setup phase, and oh look, we can delete. You want us to delete the DEF system off of this, right? You want us to delete the engine. You want us to do those kind of things. Um, that kind of stuff to me is the kind of some of the things we could see happen that roll down the path. Um,
By the way, I
John
am
Deere.
seeing a lot more auction bills now where they're right out front with a trumpet call "def deleted" right
Yeah,
on the sale bill,
yeah,
and they're not hiding it anymore. They're shouting it.
yeah. And they had a part of that situation when you're looking at how those things are playing out. You're seeing more and more folks that are open to that idea of doing that, and not necessarily have not, like you just talked about. They don't. It's not the same scenario that you've seen in the past. Which even just deleting stuff, deleting the engine, you got to think about what that does from just the savings on fluid. I mean, you look at some of the stuff. I mean, one tank of fuel is every two tanks of fuel is a tank of DEF or something, whatever that ratio is. So that's just an added cost that you can take out of your
Yeah,
operation. Yeah. But Deere has that 9700 combine or 9700 chopper. That is one of the, a mid range size chopper that is a DEF DEF free machine. So it's
yeah.
some of the
It's
stuff that's cool thing.
it's interesting. I'm triangulating the data points of what in the checkbook. What are people paying for different things,
Yeah,
and then and also what are they saying? So
yeah,
you try and combine the two, and then you look at supply, like you talked about,
yeah,
and farmer search traffic. But again, I do think if you're able, this was one of my points when I was talking out with the Keystone folks is, not to push anybody into writing a big check these days, but the 3 to 7 year old high horse tractors and combines now, it's a really good time to be a buyer,
yeah,
to call your dealer, and they have some nice deals. And when they show up at auction, like I say, we're seeing more, good value buys. So, you know, uh, and again, looking at the supply issue and the lack of new sales, that's what I get worried about down the road is, what you can buy a 3 year old combine for now versus a few years from now, whenever corn and beans do go up, that's going to be a lot more.
yep, for sure. For sure. All right, Greg, probably a good place to stop. If you're listening to this, you missed your opportunity to see Greg and us talk in Rochester for the Yield Academy.
Well, we'll
But
record something there, though. You're getting recorded,
yeah,
right? So we could, okay,
yeah,
that's all
I,
good.
I, it'll be someplace I'm sure for someone to go back and watch if they want to see it. But
We'll
but
share our wondrous wisdom with folks in Rochester. It'll be fun.
that'll be a good time. Yeah, yeah. So we'll be there doing that and look for that. I'm guessing if you have a Farm Journal TV subscription, you'll be able to see all the stuff from the Yield Academy, all the stuff from Crop Tour, all those kind of things like that. And the beautiful thing about it is, Greg, it's on demand. So you don't have to watch it live. If you miss it, just go find it when you're ready to watch it. So
exactly.
you check that stuff out there. So that'll be fun. I'm looking forward to that. I'm getting ready to jump on the road here as soon as I hit stop on this deal, and we'll head out.
You have a good safe trip to Rochester, and hope you don't have any 2.5 hour Chicago delays like I had yesterday fighting my way back. But I love Chicago, but oh my God, how do people live there with that traffic? Yikes!
I know. Yeah, it's I don't get it either. But first, if there's 4 people at a stop sign where I live at, that's a bad traffic day. So
I hear you. That's my kind of traffic.
So check out the Moving Iron Summit coming up here September 24th through 26th. Still got some space for that. It's filling up fast though. If you're interested in that and you're a dealer, check it out. Go to the events page on AgWeb. You can see that there, and look forward to seeing everybody there with that. So, Greg, I appreciate you being on. We'll see you here in about 24 hours, and we'll see you again next week for reporting.
Sounds great, Casey.
All right. Stay tuned for more Moving Iron podcast after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a Deere.
All right, welcome back to the Moving Iron Podcast. I'm Sean Hackett here to talk about what's going on in the world of commodities. Sean, how you doing this morning?
Doing pretty good. Another day in the markets, and obviously watching the Pro Farmer Tour and other things to see, what kind of crops we're going to be harvesting this fall, and also what kind of winter may be coming up.
Right on. Good. Let's jump into that. So, Pro Farmer Day 1 results came out. They were in South Dakota and Ohio. And then just 50,000 foot view. South Dakota is going to be quote unquote record crop. They're going from 156 to 184 or something like that. 179, sorry. 179 is what you're thinking about, 11% increase. On the corn side, similar situation on the bean side, South Dakota. If we look at Ohio, and flat is about as best, flat to up just a little bit is what they're saying there. So as you look at those two things, Sean, if you take a look at this, we've been talking about this for a while. 189 was a number that got tossed around there at the last USDA report. Where we're at now, how does that fit into what you see happening,
Sean? I think the trends are going to show that from, let's say, eastern Iowa east, I don't think we're going to see dramatic increases in year-over-year numbers. I think the Ohio numbers are going to be fairly consistent, where they're a little bit higher, maybe, but not dramatically so. I think the numbers in central western Iowa, obviously, we already got South Dakota. I think the eastern part of Nebraska, I think they're going to show some really, really big numbers. If you just look at where the rains did fall, where the rains didn't fall, where I just think that's where the conditions have been better. I would caution a little bit about central Iowa. They've had excessive rainfall there, and even though they have advanced tiling that oftentimes minimizes excessive wetness risk, we are hearing about some issues of excessive wetness hindering yields just a tad bit in central Iowa from some of our customers. Not that that's the scientific methodology that they'll be using at the Pro Farmer Tour, but we might find that while the yields are going to be fantastic in Iowa, they might come up a little bit short in central Iowa. And those that don't know, central Iowa is that black dirt. Some of the best ground in the whole world is right there in Gladbrook and central Iowa. And so, if that ground that's been saturated, it comes up just a little bit off, because it's so prolific what they can grow there, that could be a little bit of a surprise. We'll just have to wait and see. But overall, I think if I'm correct about what the Pro Farmer Tour is going to say the next couple of days, I think they're going to come up with a crop yield somewhere around 185, 186. That's my guess. I don't know what they're going to say, but my guess is if these trends in the East versus the West hold, I think that's what they're going to come up with. And I think that's a more rational starting place for the crop, based upon how many acres we planted, and all those fringe acres getting planted. I think that's a better place to be starting than be starting at 189, especially in the year where we had a very warm night scenario for the majority of the corn pollination in the central eastern grain belt. I just think that that's likely what they're going to say. And while that's not going to create a problem for corn supplies anytime soon, it would start to move the carryouts from the 2.1 billion bushels that they're at now to maybe something closer to 1.7, 1.8. And while that's not going to, like I said, run out of corn anytime soon, that certainly would be would be more than justified to create a mid $4 market versus an upper $3 to low $4 market. And when you're dealing in farming and you're dealing with prices that are low and margins that are basically non-existent, a 50-cent difference means losing money and making things work. And so I think that's where we're heading. And whether the market reacts to Pro Farmer or not, sometimes they do, sometimes they don't. It depends what mood they're in. But I do think that's what they're going to say, and I do think that's a better calibrated yield than 189, which I think is nothing's impossible, but it's highly, highly improbable that we would be able to pull that off with 97 million acres being planted. Now that the USDA somehow determined that they didn't know somehow, some way, that 2 million more acres of corn got planted a month after, they said they weren't. Somehow they just couldn't figure that out with all the technology we have today, that they just didn't know that an extra 2 million acres got planted. And so throwing 2 million more acres clearly in your western fringe acres where they mostly came from does not support a 189 yield. It actually makes it even less likely. So time will tell. Still a great crop. It's not about whether it's a great crop. It's just whether it's really, 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 really good or just really good. And we think it's going to just be really good, not really, really, really good. And the difference between those two determinations is a big, big deal for farmers and their profitability.
Well, the combine start rolling here about anywhere between about 30 to 90 days, depending on where you're at. And we're going to see for sure what it comes up to be then. And we'll go from there. When you look at the bean stuffs that you saw come out of those two reports, what's your reaction to that?
The beans look good. There's not as much of an issue of warm nights for soybeans as there is for corn. There's a minor issue. So when we look back at all the years that we had warm nights, it was the corn that was more persistently overestimated in the August report. Typically, soybean yields can be trend line to slightly above trend line in those warm night years where we've had okay moisture. Remember, we planted so few acres, and then we lost 2 million more acres. That only your very best acres got planted this year for soybeans. So there's a better shot that you can have a better yield because your best ground is what's going to be calculated here. Anything that wasn't your very, very best ground didn't get planted in the soybeans this year. It didn't. So I'm not feeling too bad about the soybean number. Could it be off by a half a bushel or a bushel acre down? It could be, but I don't have as strong a feeling that yield needs to come down as much as I feel the corn yield needs to come down. I think the soybean yield could be right within a half a bushel to a bushel acre. But the corn yield is the one that I think has more of an adjustment. At least that's the historical precedent. And I don't think anything the Pro Farmer Tour showed indicated anything otherwise. It looks like we have a pretty good crop in soybeans out there. Yeah.
Okay. All right. So it's simpler to talk a little about. I want to talk a little bit of cotton with you right now, just where things are at. And cotton struggled for some while now on trying to keep the price up. And it's just been a struggle for about the last, 12 months roughly. So as you look at the cotton market, how do you see that playing out as we start heading into some cotton harvesting periods here?
If you look at December cotton, it's the same price today as it was a year ago. I'll repeat that. The price today is the same as it was a year ago. And if you look at the fluctuations in cotton over the last year, it hasn't varied more than maybe two up or two down. I mean, it is the most boring market you ever want to look at. You don't even wonder why they even open the market. Might as well just close it down and let everybody tell the exchange when to reopen it so that if they want to trade the thing. I mean, it's just been unbelievably quiet. We even though we've planted low acres, even though that colder, wetter weather, which is not really actually that good for quality and for yields, it hasn't mattered because everyone continues to be worried about two primary factors, which is the tariff war, which really, really hurts cotton exports to China and Asia disproportionately, just like soybeans in the same realm. Obviously the persistent worries over economic overall conditions and the consumer sentiment, and that it's just been a pervasive headwind, and the market has not been able to get any more bearish than they've already been, but really been able to get bullish enough to break out of this pattern. We think that the crop is small enough, and we think there's going to be enough optimism over trade agreements, especially looks like with this 90-day delay one more time with China. I do think there's a chance that we'll cut a deal or we'll get some details, and maybe they're going to buy a little more cotton, buy a little more soybeans. And I just think the economic landscape, the Fed is expected to start lowering interest rates, which tends to help the future economy. I think all these things say that a long 1 year base may finally wake up with an upside move. It hasn't happened yet, but I think the odds favor that that's how we're going to break. They usually, in old trading folklore, they said never short a quiet market, because usually a long, quiet base building period is a setup for a market to eventually turn up. Doesn't always work out that way, but my feeling is the fundamentals are strong enough that eventually we're going to see a breakout to the upside before the end of the year. Nothing dramatic. We're not talking about some wild, crazy move higher, but something in the upper 70-cent level, give or take, is what I think the charts are saying we would go to. And while that's not exciting, the most exciting price cotton farmers have ever seen, that does pencil out for them. Barely. Whereas current prices don't really pencil out for them at all. So like corn and soybeans, we're not talking about massive profitability here. What we're doing is we're talking about rallies that would be good enough to pay the bills and keep a few shekels aside for yourself. That's all we're thinking we can get out of this right now, until we get some greater clarity on some of these headwinds that we've been facing.
Okay. All right. So one of the things we follow here, forget to let's talk about one more thing, is I like chocolate. So let's talk about what you see happening in Western Africa right now. You've seen the drought situation that's been some pressure on the cocoa market. As you look at the cocoa market, what are your thoughts there?
Well, we've had this historic, one of the greatest bull markets of all time, where we went from 2,000 a ton and all the way up to 12,000 a ton. And
your tough son to get a bag of M&Ms anymore.
And then we've been oscillating wildly between 10 to 12,000 and really 7 to 8,000 on the low side. We've just been bouncing back and forth as the market is waiting for production to improve, and it has been improving. Demand has been weakening. But now we have what's starting to appear to be a higher order drought redevelop in West Africa, which still produces 65% of global cocoa production. And so, that obviously, if that were to continue well into September, as we try to finish off the main crop development here, there's potential for the market to rally. I'm not saying make new highs or anything, but certainly rally to the upper end of the range and delay the time when we could see cheaper prices again. Obviously, if we're going to have what we're going to talk about here, potentially a cold North American winter, hot cocoa might be a hot item here. And so one needs to pay attention to the price of cocoa for sure.
Hot cocoa, cold nights. Can't beat that with a stick, John. All right. So that's the next thing I'm talking about, is natural gas and what you see happening there. So natural gas, mid-June. We saw just about $4, right? And that is about $1 that's come off. I think it's more enough up to 289. I remember when I looked back before we started recording. So you're seeing a dramatic decrease in that. You're going to talk about some stuff that you see happening in the Pacific and the North Atlantic that could basically trigger one of the coldest winters that we have on the market right now. So let's talk a little bit about that, Sean. While you're talking about that, I'll bring up your chart so we can have that conversation.
Well, first, the setup here is this. We have record LNG exports year to date. We're rapidly developing AI data centers, and we need record electrical power grid expansion. I think we need to increase it 3 to 4-fold over the next 8 years to meet this AI data center electrical power demand. Most of it's going to come, at least initially, from natural gas fired power plants. President Trump's administration is doing everything to fast track permits and such to get those things going. So the demand domestically for new electrical power generation is going to really accelerate starting in the fourth quarter and accelerating next year. So that's the demand setup. Now, we've had a very cool summer from a daytime temperature standpoint, which is where cooling demand comes in that we've not had this year where people live. And so because of that, the cooling demand this year has been the lowest, I think, in 10 years for natural gas. And so that has led to some larger injections into U.S. storage than the market was anticipating. And it's depressed, as you said, it's depressed the price into that 280 area, give or take. And I think we're right near the lows for the year, Casey. So that's the setup. But obviously what really drives demand for natural gas is not really summer. It is a little bit, but what really drives demand on an annual basis is winter heating demand. And we saw last year that we had a colder than normal winter for the first half. We had a big spike in natural gas prices. Demand really took off. I would consider last year an above normal winter, top 10, but not what I would call an elite winter. But it was we hadn't had a cold winter in a while, right? So that was the first shot across the bow. We went from massive oversupply on storage to below supply, and now we're a little bit above 5-year average. So what we're seeing is, and we've talked about this on your show before, is that the Beaufort Gyre that sits off of the northwest of Greenland that had been capturing all this fresh water from melting glaciers for the last several decades has rotated. And this is where that body of cold water is, and it's rotated reverse counterclockwise. And all this cold water is starting to flow into the North Atlantic. And you can see that we have a cold North Atlantic, dramatic cooling in the North Atlantic from a year ago. And once you get this to reverse, this is going to be a persistent issue, and we'll see this cold water begin to impact other parts. Notice how much colder it is in the southern part of the Atlantic. And so this is how you get the positive AMO, Atlantic multi-decadal oscillation, from the positive phase to the negative phase. We're in the process of doing that. So this is feature number one. This tends to, when you have a cold North Atlantic, it tends to produce a more persistent cold winter in the northern hemisphere, especially central east, on a very consistent basis. That's the teleconnection when you get a cold North Atlantic. That's why when you have a negative AMO, you tend to have much colder winters in aggregate. Not every year is the same, but you know what I'm trying to say. And last year was the first example of where we started seeing this when we had a cold winter. That was the forecast again for this year. Cold North Atlantic, and have another cold, at least first half of the winter especially. However, what we were not anticipating, and you could not have anticipated, is that we had this 8.8 Richter scale earthquake off of western or eastern Russia that set off 2 volcanic eruptions, an above ground volcanic eruption and an underwater volcanic eruption right here. Where my arrow's at, if you can see that.
That's the square on the left side.
The square on the left side, right? And so so when you get this massive eruptive of hot effluent that comes in underneath, it can cause short-term warming of those sea surface temperatures that are around that underwater eruption. We get underwater eruptions all the time. They call it marine heat waves. That's the technical term for it. It doesn't last forever. It's because once the underwater volcano subsides, and then things calm down, and those sea surface temperatures will cool. But so long as it's erupting, you get super hot. Now, it just so happens that the upper current of the Pacific goes like this, Casey. It spins like this.
Spins clockwise?
Counterclockwise.
Counterclockwise. So you're running along the coast of Russia.
And then straight through the middle where these arrows are, it's counterclockwise. And then the central, it goes clockwise. So both the currents are going straight from the box over to the coast of California where the arrow is drawn, and up to the northeast Pacific where the arrow is drawn. Those are your persistent currents that are there, that are going to take this warm water, and you can see it is pushing this warm water to the to the west coast of California and to the northeast Pacific. You can see that happening. When you get warm water in this northeast Pacific area, it has a high correlation for a psycho cold, snowy winter in the central eastern part of the United States and in Canada, in North America. You don't get it very often. You certainly don't get both of these conditions very often. The last time we had both of these conditions was the winter of 2013 and 2014. And that winter, if anybody remembers how cold it was, persistently cold it was, and how snowy it was, I think Boston had over 100 inches of snow that year. Just to give people understand how cold it was that year, they had to close down the Atlanta airport because the ball bearings couldn't handle the temperatures persistently below 28 degrees. We had structures in Chicago that were bending because materials, I think we actually hit temperatures of minus 40, like real temperature. It was some real psycho weather. And natural gas in 2013-14 was massively oversupplied. We were just getting started with the fracking wave. We had no demand for the product. We weren't exporting LNG. We didn't have AI data centers using up demand. And still, with massive oversupply, we were able to, I think, to rally the natural gas market that year to 6 before it topped out in a massively oversupplied market. We obviously don't have a massively oversupplied market anymore. We have an adequately supplied market if we don't have a cold winter. So if we were to have a similar psycho winter like 13-14, which was the coldest winter we've had on a minimum nighttime temperature standpoint since 1980, I think we could run into trouble on our natural gas supplies. I'm not sure. We would have to slow down LNG exports. Like, we would have to ration demand some. You're not going to stop the AI data centers. Like, demand's not going to stop. Nothing's going to stop that. So you'd have to cut off LNG exports or pare them back in order to keep the U.S. from really getting uncomfortably tight. If you remember the last time we had a problem with natural gas and we reached $10 per million British thermal units, remember that Biden at the time, who was president, was contemplating outlawing or holding back U.S. LNG exports to make things work. If you recall, that was going on at the time. Banning LNG exports. We might see banning of LNG exports again if things get nasty enough, because obviously we can't run out of it here. And if we run the risk of running it out here, we'd have to do something. And then if you think over in Europe is now completely reliant on buying LNG exports from us. 2/3 of our LNG exports goes to Europe. If we have to cut off LNG exports to Europe in the middle of the winter,
that's serious.
That it's not a good scenario. So obviously, this is what we have today. This has to be in place as we approach, mid-late October onward. But from what I can gather, this Beaufort-Geyer reversion to a counterclockwise in this cold North Atlantic isn't going to change. It's just, that's going to be a permanent feature for the foreseeable future, which is why we're going to have more persistently cold winters going forward. The Pacific is more dynamic because it's driven by an underwater volcano that won't erupt forever. But I think there's enough warm water there, and we're far enough along here in mid-late August that even if it were to shut off today, I think by the time you were to get sea surface temperatures out west there in the Pacific cold enough, and to get that over to the east and the northeast, I think you're going to be through the first half of the winter before that would happen in a perfect scenario. And that means that we're still would be looking at a very, very uncomfortable first half of the winter, which would start early. And you know, Casey, that if you have a cold December and January, that's where the majority of natural gas consumption comes from. If you have a cold February and March, the consumption is much, much less, even if it's cold, because of just the nature of the seasonality of how cold the temperatures can get. They can get much, much colder in December and January than they can in February and March. So a front end loaded first half early start, which I think is the best outlook here, it would maximize the demand for natural gas heating demand. And we could even have an issue with heating oil because the Northeast would be absolutely under the icebox. And of course they heat themselves up there with heating oil. You could actually have a heating oil situation. In 2013-14, the Niagara Falls froze over for the first time. I think that was the first time that had happened since the mid 1980s. If this plays out, we would see that again. I mean, that's how cold we're talking about it potentially being if this sea surface temperature holds itself together. And if we're having this conversation in mid-October and we're still looking at this same scenario, then the game is on. So all I'm saying right now is this is what we're looking at. There would have to be a dramatic change in the Pacific to alter this outlook. We'll be watching it closely. If things change, we'll make a change. But right now, this looks like, to me, like a pretty solid forecast for the winter and something that I think a natural gas market broaching the lows for the year, there may be an opportunity for physical buyers of natural gas and physical buyers of propane and physical buyers of nitrogen-based fertilizers and, things dependent on natural gas. There could be an opportunity here to hedge some pretty cheap energy ahead of or to hedge, if whether this type of a forecast that you don't always, you're not going to get a setup like this every year, Casey. I mean, they come and they go and you get them, but this is the first legitimate chance for something like this since 13-14, the last time we had it. And so it's my job is to make sure I give enough headway in advance so people can take action, to tell people after the natural gas market is taking off, after we see the first minus 40 degree temperatures in the US, that now you need to be locking in your natural gas prices. I mean, that doesn't do anybody any good. You have to be warning people early enough so they can, there's no guarantees in any forecast, but that they can weigh the risks of what I just mentioned today and what they're going to do about it. And how much they take this forecast seriously or not. Maybe they think I'm a snake oil salesman and they think I'm full of it. That's not going to happen. I understand that. But nonetheless, my job is to warn people what I think is going to happen based upon solid historical, objective, correlations and data. And what I'm seeing right now is that that's the potential we have. And with a natural gas market sub 3 in the nearby and mid low 3s in the deferred spring prices, for example, that seems to me like a pretty good economic place to be hedging your bets in case this forecast turns out to be true.
So you're booking a lot of speaking engagements in Buffalo this in January, right?
I've canceled all my northern built speaking engagements because of the cold weather forecast. No, I mean, obviously, I'll be very cold this winter for sure. I've been fortunate enough to bounce around the cold weather the last few years, but I won't be able to avoid this one. This one will be pretty pervasive. So,
yeah, that was you answered my question too. It's talking about what's it look like, fertilizer That's where it's at now. I mean, we've seen some movement for fertilizer now to the upside a little bit, and as we keep watching things move along. It's just about if this comes together, like you're talking about, there's going to be an even bigger chance for a spike in fertilizer going into next year's crop cycle.
Yeah, I mean, when we do speak at conferences, we always show a chart of the natural gas price relative to the nitrogen-based fertilizer price. Yes, I know there's other factors like geopolitics. I understand that that can affect the price, but when you run the correlation, it's pretty solid that if you get a big move in natural gas prices, you're going to see an impact to the price of nitrogen-based fertilizers. And I know they're already higher than people would like. And they haven't come down as much because of the geopolitics. But given this type of a forecast, you may look back 6 months from now and feel like this was a pretty good deal, even though it doesn't feel like it right now when the price of corn is broaching $4. I understand, not getting excited about where the current fertilizer price is. I think the fertilizer price relative to corn is, that ratio is not attractive. But nonetheless, I'm stating that to me, based upon what I'm seeing, if we have that kind of a cold winter and we get natural gas prices back up to where they were a few years back, I don't think fertilizer prices, nitrogen-based fertilizer prices, are going to fall. I think they would go up. We can argue how much they go up, but I don't think they're going to fall in that scenario.
Okay. Last question, real quick, and it's just kind of your thought process as you look at this pattern as it starts to develop. With it's just this increase in more than what you had already anticipated of an early frost possibilities as you look at this weather pattern. You talked about this in the past where you're looking at, there's that early frost potential and how that could damage your crops. Does this increase that, or do you still feel like it's going to be?
I mean, this certainly increases the chances. I mean, this was not something I could have predicted and didn't predict. You can't predict until it happens. But certainly it increases the chances for, a greater chance for an earlier extreme cold than if we didn't have it. There's no question. Remember, predicting an early frost is still an outlier. And so we're trying to predict something that doesn't normally happen. But this now in place does increase those chances from what they were before, even though the chances are still, not high in historical context. They're higher than they normally are, and they're now higher than they were because this is in place. No question about it. And so we need to watch those weather maps in the latter part of September or the October very carefully. You can just look at how cold it's going to be here in late August. We're getting a really, really unusual cold push here in the Midwest, out east, and the Northeast. New York City looking at upper 60 degrees for late August, which is, pretty chilly. I used to live in the Northeast half my life, and I can tell you there's not a whole lot of times I remember seeing 68 degrees in late August. And so, maybe this is a sign of, and these cold things kind of come in waves. You get a cold snap and and then another one comes. And then, so if you run this through, if we get a cold wave here in late August, and, you could see that we might get a cold push latter part of September that would be in the right time frame. So for something to be cold enough to create a freeze, we'll just have to watch it closely. So.
Okay. All right, Sean, good stuff as usual. Folks can reach out to you, get more information about what you're doing over Hackett Financial. What's the easiest way to do that?
Our website is Hackett, Hackett advisors.com. We post every once in a while, like we did today, on our Twitter page at Faradix11. We do the same thing from time to time on our LinkedIn page. Once again, we don't sit at our computer spending all day tweeting everybody, but from time to time, that's a good place to check us out, see what we're thinking, and see if what we do and how we look at things in the ag world might be of value to those that listen and watch the show.
Right on. Well, Sean, appreciate you. We'll catch you again next time.
Sounds good, Casey. Thank you so much.
All right, stay tuned for more Live and I podcast after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. Got Aaron Fennell on to talk about what's going on in the equipment space. Aaron, how you doing, bud?
I am pretty good. It's a beautiful sunny day on the High Plains.
It is.
So
That's
we're
like that shameless
just
plug.
doing our
Yeah.
thing.
Got a shameless plug on there for High Plains Wholesale. Aaron is the Chief Entertainment Officer, also known as the CEO of High Plains Wholesale.
Head
You
nitwit
can
on
find him.
camera.
Well, that's true. Yeah. And you can find him. You can find him anywhere. What you got? Facebook, Twitter, Instagram. You on Instagram?
Not Instagram.
You're on TikTok though, right?
Twitter. Actually, on Twitter, it's under me, but
Okay.
High Plains Wholesale on TikTok and Facebook, and then Aaron Fintel on Twitter.
Right
Same
on.
videos.
So you'll see that there's a cartoon depiction of Aaron and a cohort
Yes.
in that ad. That's Joel Aaron's. Joel doesn't get on camera.
No.
He's way prettier than Aaron, so he should be on camera.
He's
for
fancier.
sure.
He's easy on the prettier part. He is fancier though.
So we'll talk about some of the deals you got out there right now, Aaron. You got quite a few specs out there.
Well, we got a few videos out there. Of course, a lot of that stuff is sold, but the videos live on. You can kind of see what we're doing. Right now, big focus on, of course, dumb as this sounds, tractors and combines. But, the kind of the later model tractors, 8Rs in the deer world, S-Series combines, S700 series combines. Those are the biggest two things we're moving regularly. And we just come up with a realistic, this is no BS price, and have at it, man. And it's not, it's not problematic stuff. It's just what every dealer in America is dealing with. Too much at once.
Yep.
And this was our angle, if you will, to kind of differentiate it a little bit. And this isn't a plug on me, but my job is just what I do on the video anyway. So since we have me in my role, it's not taking a guy who's doing something else. This is already what I'm doing. We just video it.
Yep. Nope, that makes sense. You guys are doing a good job. A lot of good stuff coming out to you. You see a lot of different things come across there. It's not just that thing I like about what you guys are doing. It's not just, you're not just focusing on a specific platform. You're focusing on everything from combines one day, tractor next. You might have an air seeder on there. You got a planter on there. You might have,
we've had beet
piece of
diggers and
tillage thing.
swathers and a round baler, and I mean, we've had stuff under 20,000 to over 400. So
so it's a little bit of everything.
Yeah, and some stuff is a whopping price cut. Some stuff, I got a combine on there that's got a hell of a price break and waivers and stuff. So there some of the high dollar stuff, like, man, that's a hell of a deal, but it's still this much. Well, those typically have programs too. So just here to help. Here to
help. That's what you do. You're Aaron Fennell, the farmer's pal. You know what I mean? So,
that's it.
There you go. All right, but let's jump in and talk about what's happening in the marketplace. So this is, I would say this is the beginning of what would forage harvesting season. That's coming out, whether you're picking airage or whether you're picking cutting airage or cutting forage, whatever it might be. This is the time of year that typically starts. In most places, they're in full swing, but it's starting to trickle its way north. So forage harvesters are one of the machines out there that I love to talk about, because they are as niched as a mainline machine can be without being a specialized piece of equipment. We talked about that a million times on here. But the thing about a chopper that is that I find unique is that, for as important as that machine is, it's just like a planter is the most important thing on a farm, because you can't grow a crop without planting it first, right? But when it comes to harvesting, whether you're picking corn or whether you're chopping corn, those two things come into play. And what I think about a chopper is that it is, like I said, very niched, but at the same time, it is incredibly important when it comes to getting that machine through the field in the right amount of time to capture the right amount of moisture and the right length of cut and all the different things that come into play to get to where you need to have that at, to get the right amount of forage you have to get you through the winter to feed your cow, right?
Yep.
And or your dairy cows or whatever it is that you got going on. The other thing about the chopper marketplace is that it is niche enough that not everybody has one, right? Every farm has a combine for the most part, but very few farms that go through forage have a chopper. Some of that stuff is custom cut, or they rely upon a neighbor or whatever it is. But
right,
that number that's starting to kind of switch a little bit, where you're seeing more and more operations have a chopper of some kind, whereas you would think those operations that would have those choppers would look at it more of a custom thing, but that's starting to change, right? You're starting to see that move through, which also then reallocates how the chopper market's looked at. The one thing about the chopper market too, because of what it is, the biggest and baddest machine out there is the one that typically gets sold. And if you look at the marketplace, if you look at a combine marketplace, the most prevalent machine out there is a Class A combine, right? If you're looking at a chopper marketplace, the biggest one out there is like a 9900 John Deere or a 990 Kloss. You see, some similar equivalents out there in the New Holland side as well as on the Krone side, those kind of things. But as you're watching those things go through, the marketplace it's a saturation point on the big side, and you start seeing movement to where, hey, you know what? If we had some smaller combine or smaller choppers, we might have a niche in the market for those. But that doesn't typically last very long. They usually swings right back over to the biggest machines out there. So I guess, Aaron, as you're looking at this marketplace, as you look through this, what are your thoughts?
Yeah, to your first point, Casey, I would say it's the chopper business is a little like talking out of both sides of your mouth right now, because it's a world that has gone all but custom for the most part. Huge percentage is custom. But at the same time, individual ownership is also going up. Okay. What I mean by that is you have your 100,000 head feedlots, your however 30,000 head dairies. Some of the biggest, baddest of those two don't own one, aren't about to own one. Okay. You could give them a chopper and they'll give it back. Those big outfits is what really started the trend toward the custom side of the business getting so big and red hot. The individual guy who had his 2-row, 3-row pull type, he can see what the bigs are doing and goes, what are we doing? We get this chopper out of the back of the shed, spend 2 weeks going over it to go chop for 5 days, and I could call those guys and we're done in a day. And
right.
We watched.
Yep.
That's literally how it happened on our farm. I remember I was a kid, it was, it's chopper season. And the problem we had was everything happens in September.
Yeah.
You're planting wheat, you're chopping silage, you're getting the combine ready, you're probably starting beans, whatever. Mm-hmm. Everything is happening. You can get rid of one thing off your plate. That's another thing that was a big push for the world going custom chopper. Now, you get into a world, we've seen this in combines, big time out in our part of the world, Casey. I've always had it custom done. Guys show up, they do a great job, but if I had my own, we could get it done just a tick faster. And if they're a couple days late, I could get going ahead. So a guy goes and gets his own chopper, right? Well, then you're pretty much back into it, because anybody who's ever paid a repair bill, not on a chopper, I welcome you to pay a repair bill on a chopper, and you'll never complain about the shop again.
Right. That's no kidding.
Everything that goes in is absolute destruction. So the entire machine is a high wear item. But you have to have that machine fairly ready to go, right? Yeah. So as you see that increase, the beauty of that is that's usually where in the deer world, that's where your 8,600, your 8,800 goes now. Okay. That's where your 960, 970 Jaguars go now, right? Because this guy's going to show up with 39800s, and I'll hop in beside him with my 86, and we'll just get it done a little bit quicker. So that's kind of the biggest thing that I see really going on in the chopper market lately. Plus, like we talked with Adam earlier in the year, and to your second point, everybody always chases that big rig, and then you get little blips where, no, the mid-size one is where it's at.
Yeah.
And instead of 3 big ones, we'll get 4 mid-size ones, and we'll actually get more done because we can split the herd, and you have a lot of that in play right now, especially on the green side, because of we got that 9700 that's kind of the fit all for everybody. Yeah. And that's really taken off, and it doesn't have any def.
Yeah.
That would be chief number 1 through 10 of the reasons.
Right. Yeah.
So, I mean, it's also a market or even a business that used to be really wild and crazy in August and May or April. Like the last week of April, first week of May, and all of August.
Yeah.
If you're in the chopper business.
Yeah. So I think
now become as you have there's less manufacturers making choppers than there was 20 years ago. So that's a big factor in it. Plus, you have with the approach to the custom thing, the custom arrangement of business, if you will, those guys are more of it's off season. Let's start looking at chopper trades and that kind of thing. Whereas before, when it was, this is our chopper on our farm, it's August 1st, get the chopper out, right. If you weren't doing haylage. So it's really kind of with the evolution of how the market is in choppers, it's also changed how the market plays out through the year.
Right.
It's become a more open market throughout the year than just 2 months out of the year.
Yeah. Well, and I think that's true for everything in the space. It used to be very, you have ebbs and flows throughout the thing, and there was a peak selling cycle and a peak dead cycle, and those were but I think now it's kind of leveled out. There's still peaks and valleys, but those peaks aren't nearly as high, and those lows aren't nearly as low in those time frames. But I think the one thing about choppers that really drives home what it is, it's not like I don't want to equate it to a combine, because it's a little bit different, because we start looking at logistics. Because I go from 3 big ones to 4 small ones, the trucks that you have involved with that are taking silage out of the field, or carts or whatever it is that you're using.
Right.
That plays a big factor in what's going on with that. And I think that's the other deciding thing, because it's not like going from a Class 7 combine to a Class 8 combine. Logistically speaking, the grain carts and stuff that you have are going to work. You're going to have the same. They're going to work together like that. But going from a 9800 John Deere to a 9900 John Deere, or a 980 to a 990 or something like that, are 2 different animals when it comes to the amount of work that you're getting done with that, and the amount of silage coming out of that chute, where you have to really pay attention to what your logistics look like. So I think the other thing too about the chopper side is that you're limited to growth with your machine that you have based on the available trucks that you have in front of you, right?
Oh yeah.
I've had plenty of conversations with guys like, I'd love to add a chopper, but I don't have the access to the trucks, right? And that's the biggest thing. And the pile thing.
And what are you doing at the pile? You can have all the trucks in the world, but you got one guy packing.
Yeah.
Shut the chopper down for 3 days. He's got to catch up, man.
If those bigger custom guys like that are doing those things, I mean, they're packing that pile. It looks like a bunch of ants crawling over top of it.
Yeah.
With the amount of tractors they have on top of it. So I mean, that's that's also a defining role too as well. It's like where are you packing it at? Like where are you piling it at? Are you bringing it back to the feedlot and piling it there, and that's the only place you want to do it, or are you doing some different remote piles and those kind of things?
Right.
And what's that look like, and how are you doing that? And I think that's a key factor into how many machines you have and what the size of machine that you have.
Logistics has, I'd go with you on that. Logistics has a even slightly bigger impact in chopping than it does regular harvest.
Yeah. Because if you think about let's just take, for example, you have a Class 8 combine, you move up to a Class 11, right? You're gonna make that huge jump. You have an incredible logistics issue in front of you when you do that, right? Right. You know what I mean? That's a huge logistics issue. But if I have a Class 8 combine and I go to a Class 9 combine, my logistics don't necessarily hinder my performance of my machine, right?
Right. No.
If I have 3 Class 8s and I go to 2 Class 9s or something like that, the logistics I have for my 2 Class 3 combines are going to fit my Class 9 combines, right? Now, the logistics I have for my Class 8 combine aren't going to fit the logistics I have for my 2 Class 11s that I'm going to throw out there, right? That's a totally different animal.
Right. That's the equivalent in the chopper world of going from a 6 to a 12.
Exactly, right? That makes all the difference in the world. Yeah, exactly. So, but if I go from 298s to 299s or 2980s to 2990s, that's logistically speaking, that changes a lot more than going from 2 Class 7s to 2 Class 8s.
Oh, definitely.
I mean, it's an exponential growth in what you're doing there, right? So, and the other thing is
well, you got to look at it this way, let's look at a 7 combine versus an 8 combine and 7 chopper, 9 chopper. Okay. Combines, if you're going say 8 to 12, that's 4 rows, right? That's a 50% increase, but it's just the grain.
Right.
Okay. You go from 10 row to 12 row on a chopper head. That's 2 extra rows, everything above the ground.
Yeah, 6 inches above the ground.
Big impact. Yeah. That's a big impact coming out of that spout.
Yeah. And it's coming out. I mean, that's the thing about it too, is like it's not like a combine where you can fill up the 400 bushel bin on the combine first before you need to have the truck come.
Right.
Like there's just you got the steady stream of green spray coming out of the spout it's going someplace, right?
Yep.
Whether it's going in the truck or on the ground, it's coming someplace, right? And that there's no stopping it when you start doing that. Now you can obviously stop the chopper, right? And that's those kind of things. But the whole point of that is you don't stop. You keep going until you have to stop because, all 10 of my trucks are full now. I got to go. Exactly. They got to go do their thing and come back, right? But that hopefully never happens when you're moving that logistics. So the logistical conversation with chopper versus combine are dynamically different.
Still running an old 70s Field Queen that has the dump box on the back. that guy can keep going a little bit, but he's got to dump the dump box before he can fill the truck. So
I would say that there's few of those in running right now.
Yeah,
so, probably not
numbers.
Probably very few, unless you're doing something like a Kirby Helton out there where they're going to do the throwback combine day. If you're still doing the throwback chopper day. Yeah.
Old school choppers.
Yeah. Yep. That'd be something.
It just so we're clear here, we are talking choppers. The name Field Queen needs to come up, and now it has. So,
yeah, the old Field Queen. I've seen a few of those in my lifetime. I've never actually seen one running. I've just seen them sitting in the hedgerow along the road.
Heston self-propelled chopper.
Yep.
Yes, sir.
Heston did a lot of cool things in their day.
They did. Have you ever seen a Heston four-wheel drive tractor?
I have one time. You got to remember where I grew up at.
Brown Versatile.
All right. You got to remember where I grew up at, not too far from the Heston factory.
That's true. That's true.
So I did see a few of those running around. Saw a lot more of the Heston, like 150, 25 horsepower tractors than I did anything else.
Oh yeah. Little MFWD loader tractors and such running around.
Yeah. Very, very unique. Talk about a company that geared everything it did to hay and forage, right? That was their primary focus. There was nothing outside of that.
Nobody makes hay like Heston.
That's right. That's right. That's right. All right, man. Probably a good place to stop. Folks want to reach out to you and see what deals you have. High Plains Wholesale, what's the easiest way to do that?
Well, you can find High Plains Wholesale on Facebook and on TikTok. The same specials I share on my Twitter account at Aaron Fintel. I also share them on Facebook under my name. Or you can call me or text me, 308-760-1193.
Right on, man. Casey Seymour, you can find me on Facebook, X, Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast, TikTok at Moving Iron Podcast. You can also see the video version of this podcast over at the Farm Journal YouTube channel. You can also see it on the Farm Journal TV app, as well as Farm Journal Now on AgWeb. If you check it out there, you can see it there. You can also hear the audio version of this on AgWeb under podcast. You can see it or listen to it there. You can also find all this cool stuff that you want to find at agweb.com, and that has all the podcasts and stuff that Farm Journal has to offer. Moving Iron Summit just about sold out. Just about got our whipped here. That'll be September 24th through the 26th. If you're a dealer and you're interested in doing that, check that out. Aaron will be there like he always has been, and we'll be hanging out and talking about what's going on in the marketplace. So check it out if you're interested in that. You can also see Greg Peterson and I. By the time this comes out, you'll have your opportunity to go see us up in Rochester at the Yield Academy. That's the last day of the Pro Farmer Tour. So Greg Peterson and I will be up there talking about what we see happening in the marketplace as far as equipment is concerned. So you can check us out there. So with that, I'm Casey Seymour with Aaron Fennell, Sean Hackett, and Greg Senior Pete Peterson. Let's go some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.